So Cbus has achieved a really strong return over the last year of about 16.15% for our growth option, and that's where about 90% of our members are. Since inception, which was back in 1984, we've actually achieved an average return of over 9% per annum. So that's a really great result. Well, the fund has been going through a pretty major review over the last couple of years. It started off when we recognised that the fund was growing quite significantly and was set to double in size over the next 5 years. We've also got a stage in the membership where the demographics is changing, members are ageing and their risk tolerances are changing. So as they're nearing retirement, they can't tolerate some of the volatility in the markets that we've been seeing of late. As a result of the review that we did, we really reset what we were aiming to achieve from our investment strategy to be really focused on an absolute return. So trying to make sure that there's enough there for members in retirement over the longer term.
I think it's fair to say that what we want to try and do is preserve the strength of what we've got, which is the ability to take substantial amounts of savings, members' savings, and pull it together to do some bigger things, but also recognise that members have different needs and find cost-effective ways of actually offering it.
Investing a lot in unlisted assets like property and infrastructure has really helped the fund produce some solid returns over time, because it does keep the volatility down and also produces some really good returns from income as well as capital growth. What Cbus Property do is they're looking for development opportunities around Australia, so they've invested across a number of states, developed property that becomes income producing as well. So it's creating jobs for our members as well as actually providing some great returns.
And so what we're able to do is marry good returns with actually the capacity to generate jobs at a time when the market is actually low. The best opportunities to actually invest are often when people are less interested in the market or the market is actually down. So that capacity, I think, that strategy actually works really well on both fronts.
And it's a real connection with our members as well. So our members value it and we actually value the link with them too.
We see much bigger funds that just don't have the ability to do what we're able to do.
Some of the success that we've had in investing has really come about from the ability to be able to innovate and actually invest in a lot of different asset classes over time. And a lot of that has been due to the strong cash flows for the fund and the growth that the fund has been undergoing during that time. So we've been able to invest in infrastructure and property and private equity, which has really provided a lot of strength in returns, kept the volatility down over the longer term. We're very member focused. We want to be there achieving the best outcomes for members, so we're always looking for good opportunities to do that at the right price, of course.